You are welcome to my channel, Kevin Davis Accounting. Today, I would like us to have a discussion on the cash book. Previously, in our video, we talked about the cash book. So we were talking about the accounting books, and we said we have basically two broad classes of accounting books. We said we have the subsidiary books, and subsidiary books, we say these are books where we record transactions for the first time. So that means we record our transactions for the first time in the subsidiary books before we transfer them to the principal books. Now, we said that principal books, these are books which follow the double entry rule or the double entry system. Now, the subsidiary books do not follow the what? The double entry rule. Then we say that when it comes to the cash book, this is where we record transactions or cash transactions for the first time. But also in the cash book, this is where we also record using the double entry rule. So the cash book is the only book of accounting that follows the double entry principle and also qualifies to be a subsidiary book. So when we talk about the cash book basically talks about payments and receipts of cash. Payments and receipts of cash. So we have close to 3 kinds of cash books. One, we have what we call the single column cash book. We have what we call the double column cash book or 2 column cash book, double column cash book. We have the third one, which I call the 3 column cash book. Now, there's also the 4th one. It is called the petit cash book. But the petit cash book, sometimes, it works with organizations that really have or deal with huge sums of money. And sometimes when they need to release a little bit of money, so they use the petit cash book. But maybe we shall look at that later on. But for now, I would like to focus on this. Now, the single column cash book, the difference between all of this is in the amount section. So when we look at our cash book looks like this. Now, for the single column cash book, we shall have, of course, this is our credit side and our debit side. So we shall have the date. Then we have our particulars. Then we have our ledger folio. Then we have our amount. Then here, still the same thing, we shall have our amount. We shall have the ledger folio. Then we shall have our particulars, and we shall have our date. So this is our debit and this is our credit. So when we talk about the single column cash book, so the single column cash book, of course, our amount should be in Uganda shillings or whatever currency they give you. So if it's Uganda shillings, you indicate that it's under Uganda shillings. Now, this is how the single column cash book looks like. So it combines the amount. Here, whether the amount was by check or by cash, because we are looking at, remember we said that the cash book looks at payments and receipts of cash. So I can pay, for example, I can purchase goods and then I pay by check. That means I've paid. So payment is there, but though it is by check, that means my bank account will receive a given amount of money. So here, basically, whether it's cash or bank, it's all recorded under the same column called amount. So that's about a single column. And especially for the exam kind of setting, this is rarely set. So maybe for our understanding and enhancing a better understanding, we have learnt about it. Then let me look at what I call the double column cash book. So the double column cash book, in fact, the only changes between double column, 3 column and single column is between the amount section. Now, when we come to the double column cash book, the double column cash book, the amount section will change. Here we shall have cash and bank. And here still we shall have cash and bank. Now, when it comes here for the double column, for example, we are going to say we paid. Remember, we say that this side, it looks at the payments, the credit side, and the debit side looks at the receipts. Meaning, let's take an example. If we say that we paid purchases, so I'll put here my as purchases. Let me say by check. We paid for purchases by check worth 20,000 Ghana shillings. If it's by check, that means we are crediting the bank because we have paid 20,000 using check, and that means someone has to go to our bank account and remove that amount of money. So that means our bank account is going to be credited. Therefore, we shall say he bought purchases by check worth 20,000 shillings. Now, it could also be possible to say he paid rent by cash worth 10,000. So if it's like that, you say rent by cash worth 10,000 shillings. So that's how it works. Then this side as well, it applies the same way, basing on the language that they have used and the language that they have given. So that's how our double column works. Later on, we shall see how to balance them off. Then allow me to talk about the 3 column cash book. Now, when it comes to the 3 column cash book, this is the difference. So here we shall have our ledger folio. Now, here we shall introduce the discount allowed. Then we shall maintain our cash and our bank. The same this side, we shall introduce the discount received, and we shall maintain our cash and bank. Now, the question is, why are we putting the discount allowed this side? Remember, for example, let me say we are receiving money from a debtor, because we have said here these are receipts. So if we are receiving money, for example, let's say we are demanding someone 10,000, and we tell him that if you pay within this amount of time, we shall give you 10% a discount. So that means he won't be able to pay 10,000 as a whole, but they will pay 9,000 minus the 1,000, which is the 10%. So we shall record the amount of money that we are receiving as 9,000, and the discount that we have allowed, the discount that we have given to this individual, which is 1,000. So it will be 1,000 and the 9,000. So it means he actually was supposed to pay 10,000, but we gave him a discount of 10%, which gives rise to 1,000, and that means he's going to pay 9,000. So this is how we account for that discounts. Then, lastly, allow me to talk about something they call a contra entry. A contra entry. A contra entry, this is where, let me say, for example, we have 20,000 cash. Then we say paid 20,000 shillings to bank. Now remember, this is actually our amount of money that we have in the drawer. So if we are taking it to the bank, remember it does not increase It does not increase our amount. It's like taking money from one pocket to another pocket. So it still remains your money and still remains the same amount. Therefore, it won't increase. That means if we pay money to bank, we are depositing money to bank, cash, it is a contra entry. Therefore, we do like this. So we say we are depositing cash to bank. So that means you do cash, then you come to the bank account and record 20,000, and you come to the ledger folio and you say contra entry. Then you come on this side as well and you indicate that this side. Of course, you come this side and say we are receiving, or we are crediting to the bank cash worth 20,000 and say contra entry, meaning that we are paying, the bank account is receiving 20,000 from the cash, and so it's a contra entry. Here we come and say we are crediting 20,000 cash to the bank. So that's all about the contra entries. So contra entries is we pay money to the bank or withdraw money to the bank for business use. So basically, this is a brief introduction about the cash book, and we are going to look at this and this more in detail, and we are going to solve a number on each of them. Thank you so much for watching. This is Kevin Davis Accounting. Subscribe, like, share, and recommend to your friends so that they can also have a learning life.